Your next buyer could have all of their closing costs covered or an interest rate a full point below what the market average is. Now, I want to be cognizant of your time, so I'm going to get right into the juicy details of this. We have an investor that's allotted millions of dollars for a closing cost grant. Now, the buyer doesn't have to be a first-time home buyer. Why are they doing this? Basically, what they're doing is they're trying to fund more loans in areas that are 50% or more minority. The buyer doesn't have to be a minority, but the area needs to be. This is super common. I mean, Irvine, Santa Ana, all throughout LA, Orange, San Diego County. This is exclusive to Southern California. It's very common, and we can look up whether a property qualifies for it for you. Caveat's relatively simple. I mean, basically, they need to be in that area. The income can't exceed $238,000 for, say, a family of four. So it's relatively flexible in terms of income. I mean, first-time homebuyer programs, down payment assistance, a lot of them have more stringent guidelines and income requirements. In this case, $238,000. That's pretty incredible. That's pretty up there. One of the biggest challenges I would say that from buyers that I talk with is not just the affordability factor on a monthly basis and those sorts of things, but the upfront cost, right? I mean, if you're living in Orange County, let's face it, it's expensive. It's living paycheck to paycheck is a very common thing for a lot of people. So this really helps with that upfront financial burden, that additional cost that they're having to come up with for closing costs. And it also helps if they're buying the interest rate down by a full point. Let's take for today, for example, the average interest rate is 6.75. That's best execution. If they use this $15,000 closing cost grant to buy down the rate, now they have an interest rate a full point below what the market average is, which equates to hundreds of dollars in savings a month, right? That's huge. So not only is it helping with the upfront, burden of the out-of-pocket expense, but it's also helping on a monthly basis, which is really, let's face it, that's what buyers are worried about. The interest rate is one thing, but it's the actual payment that affects their pocketbook, and that's what really stands out to them. So our agents that are leveraging this at a really high level, what they're doing is they're utilizing this for any listings that they have, any open houses. They're talking with buyers that maybe aren't represented, and they're trying to double end transactions. They're saying, hey, listen, I'm an incredible agent and I have great value in and of itself, but this is an added value, true monetary value that they're adding and they're bringing to the table to help, set yourself apart. There's 1.6 million realtors in the nation. How do you differentiate yourself on top of the already great value that you add? This kind of just adds another tool to your toolbox. So what I would suggest is there's a Calendly link in the email there. Go ahead and click that, set up a time so we can discuss and maybe get a co-branded flyer for you, strategize around how we can implement this in your business and how we can, help move the needle in not just 2023, but also beyond. Thanks.